Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. After the earnings report, there's one other company that I want to talk about, and that is S&P Global. This is one of the companies that I own in my portfolio. I have had it for a while. It's a great company. So we want to see today if this company is actually a buy, a hold, and what I'm going to do going forward, because they've just reported a couple of days ago. So I just want to go over that and just make sure that we basically just to let you know. Remember, the whole reason I started this whole channel was just to kind of give you guys an idea of what I'm buying, what I'm selling, and what I'm doing with my stocks. It wasn't just genuinely like anything else. It was just to share my journey, and that's all I'm doing. So I've had a look at S&P Global the last couple of days, and I just want to share with you some of the things that I found out and what I would like to do with it going forward. Okay, so the company has reported the earnings on the 27th of April, so just about last week, I think. In terms of the EPS, they have actually beaten the EPS, and in terms of revenue, they actually beat as well. And the revenue has actually grew about 32% year on year. And maybe that's something to do with the fact that we're coming out of lockdown. I don't know exactly the reason why it's actually went up about 32% year on year, but it is very good. Okay, it's very good that we actually in that position, and it's not a decline. And in terms of guidelines, basically there was not much, to be honest with you. They've increasing from basically 10% to 12% based on the 12 months contribution. In terms of non-GAAP, basically EPS is still expected the range of $12.35 to $12.55, which is basically against the consensus of $12.47. So it's still a beat. The top line will actually beat that. And in terms of adjusted free cash flow, basically they're expecting it to be in the range of $4.02 to 4.2 billion to 4.3 billion, compared to prior guidance, which was 4.3 to 4.4. So it's slightly declining in terms of the free cash flow, but there's nothing huge to worry about. And they have actually increased, they haven't increased their dividend, they actually just declared the dividends on that time. Now, in terms of looking at revenue and where this company makes the money from, obviously, in terms of engineering solutions, everything else was up apart from ratings. So as you can see here, this is the 2022 and this time last year, and this is basically what they have just reported. And as you can see, the only one that's declined about 5% is the ratings. Everything else actually has gone up about 2%, 1%, 10%, 9%, 5%, which is absolutely fine. And obviously it tells us that it's heading the right direction. Now, this is, by the way, their report. You can find it on their website. And the other thing I want to show you very quickly is basically the share repurchases program. Okay, so they're expecting a new 1 billion accelerated share repurchase set to launch basically in the coming weeks. So hopefully we'll see how that goes. And this is one of the companies that they don't actually spend a lot of money. They don't have a lot of capital expenditure, and they do give back a lot of that to the shareholders by buying back their own shares and so on. So we will look at if the shares are actually now a buy, and if it's a good idea for the company. Because remember, what we don't want it to do is own a company that is actually buying back their own shares when the shares are very expensive. That should never happen, right? They should only buy back when the shares are really cheap. So for that reason, they taken more of their shares away from the market and buy it back, obviously, right? But if it's too expensive and they're buying it, I don't like that, and it makes absolutely no sense. So now let's have a look at the financials of this company and see what we're going to do moving forward. So the company is in the financials, but they don't actually deal with the banks and so on. They are a credit company, they rate and so on. The company behind the S&P 500 and S&P 400 and all of that stuff, and the Dow Jones and so on. Okay, currently trading $355 per share, and the 5-year basic return is about 80. Let's call it about 85%. In terms of EPS, we're looking at about $8.50, and then market cap of $116 billion. Okay, in terms of a wide economic mode, we're looking at about wide economic mode, which is basically the highest you can get from Morningstar. This means the company has a competitive advantage over their competitors. And to be honest, this company and a couple of others, there's only other two companies that have kind of monopolized that market. So it's a very difficult market to get in, and they are by far one of the best in that market, which is really good, which is one of the reasons I own this company. I don't own it because of just dividends or anything like that, because the dividends are not great. It's quite low, in fact. But one of the reasons I own is because It is the type of business that almost every other company out there needs this company, and they monopolize the market. They're actually very good in terms of the management are very good of basically buying back the shares, the issuing the dividends and so on, and they are basically returning a lot of money to the shareholders, which is quite good. Beta is slightly above 1, which is actually a little bit surprised because I thought it would be slightly lower. But there you go. So PE for this company is very funny because it is quite expensive, right? It looks from PE side of things, but the forward PE is very low. In fact, that PE seems very high. Let me just double check. Yeah, it looks like it is what it is, 41. But when you look at the forward PE, it's actually quite low, and the 5-year average we're looking about 29. I think it must be Yahoo Finance must be playing a game. I'll double check that later. But there's loads of websites where you can check, but I've only checked to see Yahoo Finance, and it looks like it's about 41. But when you compare that with the 5-year and average, that's actually very, very high. Okay, it doesn't make sense. It's normally supposed to be in the 30s. But price to free cash flow is about 41, okay? And when you look compared to financial sectors normally has a lower PE anyway, so it really doesn't make relative sense. It makes no sense, right? Annual dividend yield of just 1%. Latest increase was about 6%, and the 5-year growth rate about 15%. Annually, you get paid $3.60. Dividend growth streaks of 49 years. So next year, if they increase one more time, this company will become a dividend king. And that's a company that have increased the dividend for 50 years in a row, and 25 if they are dividend aristocrat. Payout ratio looking about 40%. So they do have a room to grow that dividends, and dividend safety is 99%. Free cash flow here, okay, we're looking about 2.87. And free cash flow yield, we're looking about 2 billion, by the way, that is, of dollars. And then free cash flow yield, we're looking about 2.5. Basically, normally we're looking about 3%, which is absolutely fine. It's almost close enough. But this is where the company shines in terms of profit margin, in terms of return on equity, in terms of operating margin is really good. Return on equity slightly lower than I expected. Total return in the last 10 years about 11%, and return on invested capital we're looking at about 8%. Now revenue in terms of like the last 5 years, they grew that revenue about 11.4%, which is really good. And current ratio just below 1. We're looking for anything above 1, but just below 1. So that's nothing huge to worry about, because the fact that the company still have a bit of a cash in the balance, so it should be okay. Next year, they're expecting the earnings to grow by 11%, and then basically 15%, sorry. And then the years after, the 5 years after, it will be $12 and 12.7%, which is really good. So if a company like this is growing their basically earnings, for example, 12% every single year, that's really good. Double digits is really good. It's more or less this type of business. That I would say that's a high growth, right? In terms of Morningstar, the valuation is about 2% discounted right now. They're expecting the price to be 370. And then according to Simply Wall Street, they're actually saying about 87% overvalued. I'm not sure what's going on here, but they think the price should be, okay, according to their calculation, is $193. That's where it should be. But right now we're looking about $350, or if not more. Target price for TipRank is actually 412. And that's the next 12 months, basically. Their target for the next 12 months is $412 per share. And that's about 13-14% upside, which is really good. And then it's more or less the same when it comes to Seeking Alpha. And Seeking Alpha is actually saying is a buy. Now, in terms of the Sharia compliance side of things, in business side of things, activity is actually 100% fine. Interest-bearing debt, we're looking about 12 to 11%, and then interest-bearing security, we're looking about just 1%, which is fine. Now, they have been buying back their own shares, and I had to check this because I was wondering what on earth is happening here. But apparently, the company acquired another business recently, and I think that is actually now going to help the overall business in the next few years. So they have diluted the shares in that sense, but they have been buying back for almost basically 8+ years, and then all of a sudden, boom, they've started increasing it because they needed that cash to actually acquire the other business. Now, going forward, we're looking at the revenue side of things. Okay, the total revenue is actually expected to grow. So from this year, which is about 11.18, okay, $11.18 billion of December 2020, that's where 2022, December of 2023, which is this year, will be 12 and 0.37, and then from there 13.28, which is actually good and is heading the right direction. The same goes for EPS. If I take the estimates, you can see they have a bit of a decline in 2020, and I think that's probably why one of the reasons that the stock has come down a little bit in terms of earnings. But now they are expecting basically this to grow next year, which is good. So it had a little bit of decline, but it is going to go back to those levels and even go higher from there. So going back to my portfolio, if you're looking at this company, right now I have 11 shares of this company. My plan was basically to add to this business. And at one point I had that price target, but it obviously never reached that price target. But yeah, so what I'm gonna do is I'm gonna add in the next couple of months, well, months to come. If the stock market kind of starts to decline a little bit, then I'm already in the red, so I will be buying to it. I'm basically buying more of this company 100% in the next few weeks. I want to own 15 shares, which will put this company one of my top holdings. So right now that will be about £1,000, so that will be about 4,000 something, and that will be closer to how much I have got in the top basically 5 whatever. So I would love to own this company for a very, very long time, inshallah. And if I actually see a weakness in the basically market in the next couple of months, I will just start nibbling, buying just a little bit here and there. It's not the cheapest of the stocks out there based on PE, but obviously I do own it already, and I'm just a little bit down, so I don't mind averaging it down here and there whenever I get the chance, inshallah, going forward. Now, before I stop the video, I just wanted to quickly mention the fact of what's happening today. So in about less than an hour, if you're watching this, depending on what time you're watching this video, the Fed will start basically talking about what they're going to do moving forward. So they're expecting 0.25 increase in terms of interest rates. And the thing is, everyone is expecting that. The market is expecting that. Market is obviously expecting that right now. So that's why it looks a little bit green. But if they come out and say they are also expecting to increase it again in June, basically in June, July, whenever they do it again, then that's when the market will start tumbling. Maybe we'll see a lot of red. So it'll be interesting to see what happens today. But as always, I mean, it came down yesterday, was it, or day before? It actually came down quite a bit. I started buying more. Remember, at one point, I think this week, we were, let's say, 71,600, right? But then it has come down quite a bit, although I've even added some money to the account. So inshallah, I've got a couple of companies. As always, I have my watch list. I'm watching some stocks here that I would love to add to. So if they come down quite a bit, in the overall market comes down quite a bit, then I will definitely be adding more to these stocks that I actually want to buy. Like I've always said to you guys, this is the time I actually add to my portfolio a lot more. So when the earnings are happening, everything else is basically kind of going crazy, and the Fed comes out, says this and that, that's when we get opportunity, and that's when I add a lot more money to the portfolio. Now, talking about the portfolio, I have 2 more videos coming up, inshallah. The dividend campaign, basically, in fact, I might just combine it to one video, inshallah. I'll see how long it is once I've done the scripting side of things. So inshallah, yeah, I will release the video just to go talk about every single stock that I own in this portfolio and what I've done, the buys, the sells, the dividends, and all that stuff, just to stay transparent and just like keep you guys updated, inshallah, because that's the whole reason we're here, right? Just to be transparent and share our journey with each other. If you would like to join us on the Patreon, that will really help. Okay, for $5 you can get all the spreadsheets that we use in this, all the spreadsheets that I use actually personally. Okay, and you can also basically get access to the Discord to talk to brothers and sisters who are very much like-minded. So yeah, let's do that inshallah in the next couple of days, and we will see where we are. Assalamu Alaikum.